We watched the S&P 500, the Nasdaq, and the Dow soar on Friday. This is because some Fed speakers indicated a slowdown or potentially a pause in their rate hiking regime. Now, where did all of this start? Obviously 2020, but more specifically, it was the same catalyst or event, I should say, that we are going to get this week, which is Fed Jerome Powell's congressional hearing, where he essentially outlined what they were going to do to get inflation down back in 2022. This was in March, and this caused massive downside in 2022. It caused the Nasdaq to drop 35% peak to trough. It caused the S&P to drop over 22%. And this time around is likely to be no different. It's going to give you that big move in the markets. It's really going to drive the overall sentiment and narrative for 2023. Do we get a Fed pause? Do we get a Fed pivot? Are rates going higher? Are they staying higher for longer? Where does the Fed see the economy going in 2022? All of this will be answered this week, and we're going to talk about where the markets could go and what people are saying about this event. Now, that's only part of it, because you also have very important economic data that will be strung throughout this week. Most importantly will be the unemployment rate and the non-farm payrolls coming on Friday. So the work is cut out for us here in this video. Let's get to it. Hit the like button and subscribe to the channel if you like making money, if you like the markets, if you like to stay up to date with everything going on, guys. So like I said, S&P 500, basically everything rallied on Friday. Quick backstory, you had Fed Bowman, Fed Bostic that came out on Friday and said the Fed is close to a pause. This is what we have heard before, and then you get more rate hikes. It goes from we're close to a pause to we need to raise rates more to should we do 25% or 25 basis points, should we do 50 basis points. You kind of see this pattern playing out. Well, when Fed speakers, especially voting members, start to say we should pause, you're getting more dissent. You're getting more disagreement between Fed members, and that's where you can get policy shifts. And that is the first inkling that we got on Friday, and that's why the markets rallied. Long story short, that's the conclusion you could come to that caused the rally on Friday. And it was pretty aggressive. It was pretty much straight up all day. There wasn't really a pullback substantially, and the only pullback you got was about an hour into the trading day, as you can see right here. Now, this was only a precursor for what we can expect for this week. Let's jump right in with the economic data. So on Monday, which is tomorrow, you're going to get factory orders month over month for January. You are expecting a negative 3.7%. Last month's reading was positive 1.8%. So this could be important, obviously, due to supply and demand. Inflation could predict inflation going higher or lower. Now, that's going to be the first bit of economic data coming at 10 o'clock in the morning. It's not one of those big data points like CPI, like some of these things we're going to get on Friday. So, yeah, be aware of that, right? But that's all we got for Monday. On Tuesday, right here highlighted in red, Fed Chair Powell testimony. This is going to be the main event for this week. This starts Tuesday, 10 o'clock, and it goes until Wednesday, also at 10 o'clock. So between these 2 days, that's where you can expect to get new information. And this is really where you should get new information, right? This is where Fed Jerome Powell has his chance to outline policy for the next year. And this happens every single year in 2022 and now 2023. It's a lot more important than previous years. And that's why everyone is going to be paying attention to exactly what the Fed says. Literally every word will be heard and scrutinized coming from Fed Jerome Powell. So slightest little changes will be important. So I highly recommend you guys do watch that for yourselves, or like I said, subscribe to the channel and turn on that notification bell so we can bring you any updates that do happen on Tuesday and Wednesday. Now on Thursday, you're going to, or Wednesday still, you're going to get the balance of trade. That is for Canada. Who knows? You're expecting the first deficit in a little while here, so be on the lookout for that. Canada, America tend to run the same. America's deficit is really bad, so obviously ours is a little bit worse. But you also have at 8:15 in the morning ADP employment change. You're expecting 110,000. Last month's reading was 106,000. The balance of trade for America at 8:30 in the morning as well. Bank of Canada interest rate decision. Now, the Bank of Canada tends to pretty strongly correlate with America, so that will also be important for implications of American central bank policy. Jolt's job openings for January comes in at 10 o'clock in the morning as well on Wednesday. Last month's reading was 11.012 million. Call it 11 million. We're expecting 10.6 million job openings. So a pretty decent contraction there. If you don't get that, not going to be good. And economic data has really tended to surprise. So again, it wouldn't be surprising if you see less job openings. And that's obviously not going to be good considering the labor market is so tight. And there you have it again, Fed Chair Powell testimony. Now, if we go ahead and go to Thursday, you're going to get initial jobless claims. This has been a big one so far in 2023 that has given us really big moves in the market. Just again, because the labor market is so tight. Last month's reading was 190,000 jobs. This month, you are expecting 192,000 jobs. So anything, higher or lower can give you a big move. But as of recently, it's been pretty in line. So there's that. Friday, this is the big data that we're going to get. The non-farm payrolls. 8:30 in the morning on Friday. Last month's reading was 517,000. Remember, it blew out all expectations. Not one single economist got this right. They weren't even close. We were expecting 200,000 in January. 500,000, out of this world. This month last month I should say, for February, you're expecting 210,000. So a slowdown. Some people would say that was seasonal adjustment that caused that move higher in non-farm payrolls for January. Who knows? Either way, if non-farm payrolls go higher, that's not going to be good. Same thing with the unemployment rate. If that goes down, not going to be a good thing. And you can see from this chart, it's been pretty much straight down. You're at historical levels for the unemployment rate. So really, the only place it could go is up from here, right? Not necessarily a good thing. Last month's reading was 3.4%. I keep saying last month. January's reading was 3.4%. February's reading, you are expecting, again, another 3.4%. Even more important than these overall headline numbers, especially for the non-farm payrolls, probably going to be average hourly earnings year over year and month over month, as well as other data points within the non-farm payrolls and the unemployment rate. That could indicate people are making more, people are spending more, right? Anything that gives you any inclination that inflation is going higher right now is not going to be good. Vice versa, there's a possibility that average hourly earnings slow down and the productivity rate actually does go up. And that would be kind of the best case scenario out of the economic data coming on Friday. So there is your rundown. Now, if we take a look at earnings, you're still going to have some earnings. Nothing too crazy, though. Monday pre-market, you're going to have Lordstown. I think that one is pretty interesting considering everything that has happened with that company. Monday after hours, Trip.com and a couple other companies as well. Tuesday pre-market, see Dick's Sporting Goods, Dole, right? You want to see what these companies have to say about, number one, demand, but most importantly, actually I shouldn't say number one on that previous one. Number one, any inclination of inflation. As you can see, all of this comes back to the inflation story. Tuesday after hours, CrowdStrike, that's gonna be the big one. Stitch Fix as well. Wednesday pre-market, Campbell's. Wednesday after hours, Asana. That's pretty much it. Thursday pre-market, JD.com. China stocks, if you guys are investors in those, be careful. But you have JD on Thursday in pre-market. Thursday after hours, Alta, DocuSign, Bio, Nano, Genomics, Gap, Oracle. Those really Thursday after hours is going to be the big day as far as earnings, right? CrowdStrike on Tuesday is going to be important, but Thursday is going to be much more important. And then you have the good old Buckle Friday in pre-market. So you're starting to wrap up earnings season, and I think that leaves a lot less risk on the table as far as company earnings, because ultimately what dictates where markets go is company earnings. The Fed raising rates, they're just trying to slow down the economy. People are just fearful that earnings will slow down and that you might get a recession. Well, you're not seeing that right now in company earnings. Yes, they're not saying the best things like they were in 2020 or 2021, but they're not saying things are terrible. So keep that in mind. That does, I think, put somewhat of a floor on any potential market downside that you might see. Now, if you take a look at the S&P 500 on a daily candlestick chart and just look at this on a more long-term perspective, you have broken into an uptrend. That's clear to see. You were in this downtrending pattern, right, where you essentially take a line from the peak and connect it from down to the peaks of the rallies that you've seen in 2022. You get a peak right here, 1, 2, 3, 4, and then you broke above that. And that was around January 20th, right? The week of January 20th to the 27th. Broke above that. You went higher and you came back down. But you see what's interesting about this, and I haven't updated this chart actually in quite a while, is the same level you were getting resistance at throughout 2022, you found support at. And now you started to move back up. The moves that you've seen at least on Thursday and on Friday. So it does look like you are in a confirmed bullish uptrend in the markets. The only thing that could really derail this from my perspective is going to be Fed Jerome Powell, and CPI does not come out this week. It comes out next week. So I think this week could overall be a pretty bullish week. If we take a look at the RSI, that is at 52.87. So not oversold, not overbought. It's pretty neutral, that neutral level being 50. If you also take a look at the MACD, that is pretty neutral overall, slightly in bearish territory, believe that or not, starting to curl up just a little bit. And the last thing that I like to look at is the moving averages. Let's go ahead and pull up the most popular moving averages. And they're popular as far as people look at them, but more importantly, algorithmic trading programs really look at them. And this 200-day moving average, that has been the key. And what happened? Well, you broke under this on Wednesday and Thursday of last week, and then you gapped up higher above this moving average. It's actually the 50-day moving average. My apologies. You gapped up higher above that. So again, confirming a bullish uptrend. So I think this week is going to be very important for all of the reasons we talked about here in this video. Most importantly, Fed policy for the remainder of 2023. Guys, so that is going to do it for this video. Hit that like button and subscribe to the channel if you have not already. Most importantly, thank you for watching and enjoy the rest of your day.